Welcome to our non-traditional data video, where we will unpack the use of non-traditional data in the provision of financial services. Today, we will chat to Awelani, who explored this topic in a South African context by looking at how financial services firms are utilizing non-traditional data, some of the benefits and risks that comes with, and also some of the regulatory implications. As many of you will know, big data is increasingly having a material impact on how organizations serve customers across a number of industries, including financial services. It is shaping product and service design, customer experience and personalization, decisions and recommendations, and risk management, to name a few use cases. Awelani, within the context of this rapid rise in big data, can you walk us through what is non-traditional data and how it is being used to create value in financial services?
Thank you very much, Kagiso, for that. Non-traditional data is the data that is normally sourced from external sources used to supplement organizational data. Non-traditional data differ from traditional data because normally traditional data is data that is gathered or sourced from internal sources or core systems. There are actually 5 stages in which this non-traditional data can be converted into insight. It includes data collection, data processing or cleaning, data storage, analytics, as well as visualization. When you look at the whole big data universe, what we are seeing, especially on the issue of ease of capture, is that the financial service sector, along the technology, media, as well as telco and the health sectors, are some of the sectors whereby there's a tremendous amount of value that is to be derived from big data.
All right, thanks so much for that, Awelani, in terms of just setting the scene around the prominence of non-traditional data and some of the value that can be derived from it. So when we bring this closer to home, please can you give us some of the examples we're seeing in the South African fintech landscape as it relates to the use of non-traditional data in the provision of financial services?
Sure, Kagiso. When we look at our domestic landscape, that's a South African landscape, 3 common use cases we found to be most prevalent. This include payments, lending, as well as insurtech. In payments, what we are seeing is that fintechs are actually using non-traditional data in combination with the transactional data they have to sort of drive user experience in the mobile payment space. And then in lending, what we are seeing that fintechs are actually leveraging non-traditional data to sort of increase consumer credit profiles and to design more accurate credit score and to do overall risk management. And then in insurtech, what we are seeing is that the fintechs are actually leveraging non-traditional data to be able to come up or design premiums that are more affordable to consumers and also to conduct the overall risk management. So those are some of the most common, if I can say, use cases that we're actually witnessing in the South African fintech landscape.
That's really interesting, Awelani. So in your research, you also conducted interviews with these very local players that you've described. So in these interviews, what were your key findings?
Thanks, Kagiso. Yes. On the research that we conducted, I will start by saying the overall picture that we saw is that the financial service providers in South Africa use of non-traditional data in the provision of financial services is still in the nascent stage, meaning that there's still room for maturity and the growth. So that's one thing that came out from the research. And over and above that, we also found that there are actually benefits risk to financial service providers as far as the use of non-traditional data for provision of financial services concerns. And there are also implications to regulators. So some of the benefits that we've managed to identify include personalization, whereby these fintechs are able to design product and service that are fit for purpose to certain consumers. There are benefits of financial inclusion, where we found that fintechs are actually leveraging the non-traditional data to drive usage quality as well as uptake of product and services. There's also a benefit of customization, whereby these financial service providers, they are able to leverage on non-traditional data to sort of increase or drive interaction between them and their customers. There's also a benefit of affordability that we managed to identify, whereby fintechs are able to leverage on this non-traditional data to come up with more affordable product and services to consumers. On the risk side, though, we saw that there's a risk of data privacy, whereby that consumer data, it can be used without their consent. We also see that there is also a risk of data misuse, whereby these FSPs can use consumer data beyond the scope of consent. We also see that there's also a risk of what I can call discrimination. This is due to the fact that when there's more granular data available and there's a use of algorithms, some of the customers or consumers, they end up being discriminated from accessing some products or services in the market. We also see that there is also a risk of data security, whereby most of these FSP, they lack what I can say safeguard to ensure that consumer data is sort of protected from a breach or any malice that can happen out of that. So those are some of the risks that we sort of identify on the risk side. So in terms of implications to regulators, what we have identified is that there's a lack of what I can call liability framework in place, whereby regulators can sort of make financial service provider accountable for misuse of consumer data that is in their care. We also find that there's a need for general consensus among regulators as to how can this non-traditional data be used or be treated for the sake of consumer protection, for the sake of efficient financial system, and also for the sake of innovation and economic growth in our economy. So basically, in the nutshell, those are the issues that I can highlight that emanate from our findings on the study that we conducted.
Thanks for that, Awelani, for providing a very insightful and interesting snapshot into how non-traditional data is being used in the provision of financial services in South Africa. It is very evident that the use of big data, and in particular non-traditional data, is growing rapidly, both globally and locally. On one hand, this obviously promises compelling benefits to consumers, as Awelani has pointed out, but on the other hand, it also introduces new risks that we have to carefully consider and manage. So thanks for joining us on our non-traditional data knowledge nugget. As our work evolves on this topic, we look to further engaging with you. Thank you.
Thank you very much.